Most businesses in the United States are organized as a sole proprietorship, a partnership, or a corporation. Which form of organization would be best for the tutor shop or any other particular business concept? That depends. Before you can make a choice, you should understand each type of business and the associated advantages and disadvantages. In this module, we will assess the various ways to organize a business. So the key idea for Module 20, looking at the different types of businesses, is that entrepreneurs consider both the advantages and disadvantages of different organizational types before they form a new business. So first, I will identify the important features of sole proprietorships, partnerships, and corporations. Second, I will evaluate the advantages and disadvantages to the owners of each form of business organization. And finally, we'll conclude the module by assessing the importance of each form of business organization to the economy. And then, I forgot this, I'll explain other ways to organize a business. So let's look at our first type of business, a sole proprietorship. A sole proprietorship is defined as a business firm owned by one person, the proprietor. 7 out of every 10 businesses in the United States are organized as sole proprietorships. Most sole proprietorships are small firms. They are especially common in industries such as healthcare, real estate, retail trade, agriculture, and the arts. Professionals such as doctors, dentists, lawyers, and accountants are often sole proprietors. So how do you start a sole proprietorship? A sole proprietorship is the easiest and least expensive type of business to organize. To start a sole proprietorship, you have 4 important tasks. Number 1, register the name of your business. Unless you name your business after yourself, such as Lori Stanton's Tutor Shop, you will have to register your business's name, the Tutor Shop, with a state, county, or local agency. Second, you need to check and conform to regulations. As the sole owner of a sole proprietorship, you'll have to comply with federal, state, and local rules and regulations. For example, almost all cities have zoning regulations that restrict the types of businesses that can operate in different neighborhoods. There are also many regulations involving health and safety, as with restaurants, or training and certifications, as with hairstylists and plumbers. Third, you need to obtain any necessary licenses and permits. For most businesses, you need a general business license from your state and local government. You may also need a permit verifying that you've conformed to any special state and local regulations. It is generally necessary to pay a small fee for licenses and permits. And fourth, you need to keep records and prepare tax forms. Because you will have to pay taxes on your profit, you will have to keep records of all your costs and revenue. And if you hire employees, there are some additional tax forms you'll need to fill out when you start the business. Now, should everyone start a sole proprietorship? Well, no. There are advantages and disadvantages to this form of business type. Is a sole proprietorship the right choice for the tutor shop? Let's look first at some of the advantages. First, it's easy to start up. As you've just seen, setting up a sole proprietorship is easy and inexpensive. You can do all the paperwork yourself without hiring a lawyer or an accountant. The fees for licenses and permits are low. Second, it's easy to make decisions. As a sole proprietor, you have no boss. You make all the decisions yourself. You don't need anyone's approval or agreement if you want to try something new. For example, if you wanted to advertise the tutor shop by putting flyers on cars at high school sporting events, you could just do it. This freedom of action enables sole proprietors to respond rapidly to changing market conditions. Third, you have ownership of your profits. As a sole proprietor, all the profits of the business, after you pay taxes, belong to you. It's up to you how much of each year's profit you invest back into the business. The rest you are free to spend or save as you desire. There are tax benefits. A sole proprietor has certain tax benefits over a corporation, another form of business that we'll discuss a bit later. The profits of a corporation are taxed twice, once as corporate profits and again as income for the owners. But as a sole proprietor, your profits are considered part of your ordinary income. Each dollar of profit is taxed only once, when you pay income taxes. And finally, there are intrinsic rewards. Aside from the financial advantages, many people enjoy the freedom of being their own boss and the feeling of accomplishment from building a successful business. But while a sole proprietorship has many advantages, there are disadvantages as well. First, there's the burden of responsibility. As a sole proprietor, all of the responsibility of ownership falls on you. Even if you have employees, it is likely that they will look to you for guidance and expect you to make the tough decisions. If you fall ill, the business may suffer. When you take a vacation, you can never fully escape your responsibilities. Imagine relaxing at the beach and getting a frantic call from one of your employees informing you that half of your tutors have suddenly quit. It's difficult to raise money. It takes money to start a new business, and sole proprietors sometimes have trouble finding the financial resources they need. Banks may not want to lend money to a new sole proprietor because the business might fail, and there is no business property the bank could claim if the loan is not paid back. Many sole proprietors have to fund their startup with their own savings or by borrowing from friends or family. And there is unlimited liability. A sole proprietor is personally responsible for all the debts and other obligations of the business. If you own a sole proprietorship that fails, or if someone sues your business, you will have to use your personal wealth to pay back any debts or to settle or fight the lawsuit. You may even have to sell your house and other personal possessions. The second type of business organization is called a partnership. Suppose you've been operating the tutor shop for a while as a sole proprietorship. Things are going well and you're making money. You have dozens of tutors serving hundreds of students. You've even hired a few employees to help you manage the business. But being responsible for all the big decisions is hard. So you find yourself wishing you had a partner, someone who cared about the business as much as you did. Now you are thinking of changing the form of business to a partnership. A partnership is a for-profit business firm owned by two or more people, called partners, each of whom has a financial interest in the business. Like sole proprietorships, most partnerships are small firms. Many stores, restaurants, and contractors operate their small businesses as partnerships, but many larger businesses are organized as partnerships too. These include large law firms, medical practices, and business consulting firms. Now, let's say you wanted to create a partnership. How do you do so? Well, partnerships, like sole proprietorships, are fairly easy to organize. The initial steps are the same as for a sole proprietorship. To make the tutor shop a partnership, you would register the name of your business, check and conform to regulations, obtain any necessary licenses or permits, and deal with accounting and tax forms. Forming a partnership, however, usually involves one additional step: creating a partnership agreement. While a partnership agreement is not required under the law, it is highly recommended for all partnerships. A partnership agreement is a written document that identifies the roles, responsibilities, and obligations of partners. Much of the agreement deals with the what-ifs of the business. What if profits soar, or if revenues plummet? What if there is a serious dispute among partners? What if one or more partners want to dissolve the business? The partnership agreement states in advance a process for addressing these types of questions. Partnerships usually hire lawyers, accountants, or other experts to help them draft a workable partnership agreement. This is the main reason that forming a partnership is a bit more complex and expensive than forming a sole proprietorship. The partnership agreement also identifies which partners are general partners and which are limited partners. The general partners share full financial and decision-making responsibility. Every partner must have at least one general partner. A limited partner invests money in the partnership but does not share decision-making or full financial responsibility. There are also advantages and disadvantages to partnerships. Would a partnership be a good choice for a business like the tutor shop? Let's first consider the upsides. A partnership has many of the same advantages as a sole proprietorship, but these advantages are a bit weaker with a partnership. For example, while a partnership is relatively easy to set up, it has that one extra step of forming a partnership agreement. The partners own all the profits of the business, but each partner gets only a part of the profits because they must be shared with the other partners. Each partner's profits are taxed as ordinary income, just as in a sole proprietorship. Partnerships, however, have some special advantages over sole proprietorships. The first is that there is a larger pool of financing. In a partnership, each partner can contribute funds to start the business. Banks may be more willing to provide loans because they can collect from more than one person if the business fails. Organizing the tutor shop as a partnership would permit the business to grow because it would give you access to more funds, which you could spend on increased advertising, recruiting, equipment, or office space. There is also shared decision-making. Recall that one of the disadvantages of sole proprietorships is the burden of responsibility for all decision-making. In a partnership with more than one general partner, this burden can be shared. If you are ill or go on vacation, you know that your partner will take care of things in your absence. Also, each general partner may have different skills and talents. For example, at the tutor shop, you might be especially good at recruiting and managing new tutors, while one of your partners might do a better job dealing with the parents of students. A partnership can exploit these different abilities to create better decisions and a more successful business. One of the disadvantages, though, is that there is unlimited liability for general partners. So before deciding to start a business, you need to consider these downsides. Each general partner shares personal responsibility for all the debts and other obligations of the business. If the business fails, or if someone sues the business, each general partner will have to use his or her personal wealth to pay back any debts or address the lawsuit. This means that errors by one partner, if they lead to lost business or lawsuits, can cause devastating losses to all the general partners. Limited partners, by contrast, can only lose the funds they have invested in the partnership. Second, there can be disagreements among the partners. Decision-making requires the agreement of all general partners. When everyone agrees, it's fine, but disagreement can cause major conflict. Suppose you were sure that the tutor shop could increase its profit if you hired a full-time receptionist to handle phone calls, but your partner wanted to limit contacts to emails and thought a receptionist would be a waste of money. You might argue endlessly, each trying to change the other's mind. Bad feelings might result. While some partnerships go smoothly, others are so conflict-ridden that they eventually dissolve or blow up into battles over who is to blame and who owns what. Remember, the advice about forming a partnership agreement in advance to help avoid such issues.